All right, we're back. We are back. Welcome back to the AppliedMMT live stream. I'm your host, Douglas, with Adam once again this week. Adam, how you doing?
I'm doing well, Doug. I'm doing well. Glad to be back.
Yes, to the most informative, exciting, educational. You're going to learn more about economics, finance, markets in the next hour than you will have your entire life here. Or, I mean, that's assuming you've been listening to the mainstream. We're going to bring it in tonight's live stream. Chat, welcome. Say hi if you are in chat and you're joining us as we kick things off. I tried a different strategy tonight to try and get the word out in terms of the Twitter strategy. I don't think it worked as well, so we'll see how it goes. But maybe we'll have some late stragglers coming on in that are just realizing that we're going live. But chat, welcome, and I think for the lineup tonight, we've had this massive rally in Bitcoin, which is something we want to talk about as it relates to MMT. We had a recent interview that will be going up when. Adam, with Brett Scott?
Tomorrow morning.
Tomorrow morning
morning at it's either 7 a.m. or 10 a.m. Eastern.
Perfect.
Is part one, and then part two will be 2 weeks from tomorrow.
Perfect. It was a really good discussion, and Brett's a really smart guy. It was one of those discussions too, where if you're not terribly familiar with Bitcoin and the interplay between what we kind of see as money in the MMT world. I mean, if you kind of want to get those two things squared away, I know a lot of the questions I had went to that direction, and so that was overall a good discussion there. And then it went into a lot of different directions. But
I thought the Brett is very good at kind of framing these things and making them more understandable. So like understanding what Bitcoin is, understanding what bank deposits are, understanding what money is in general, and like using metaphors to do that. I thought that was one of the more intriguing parts of the conversation, in my opinion.
I concur. He actually had some really good analogies that were very helpful, and
he did.
One of the things that came up, by the way, Ghost on the Half Shell, welcome. Also got Vladimir in here. Welcome. Thanks for saying hi in chat. One of the things that with money, and this will actually maybe help us get into the discussion on Bitcoin, but one of the things that is difficult with money and discussing MMT, that I just realized in these discussions, and I think was solidified in that discussion that we had with Brett that'll be coming out tomorrow, at least part one, is it's very intuitive for us in this heterodox economic world to understand that money is credit and credit is money, and there is a such thing as credit money, and that you can understand the entire economy through just the lens of credit money, that it is a separate system that exists not as an evolution or building on top of commodity money. It's just a different monetary system, and societies have generally chosen this type of credit money system. And when your mind is hardwired to think in commodity money, when someone just starts speaking the language of credit money comes along, it's just impossible to connect the two. And I mean, the only analogy I can bring it back to is when you first kind of learn about gravity as a force and kind of traditional Newtonian terms, and it's like, okay, gravity's moving on one. Again, the analogy is going to break down at some point, but gravity is this force, and you can definitely explain it that way. But then you learn about space-time, and you get the sheet out, and you put the heavy ball in the middle, and then you orbit the other ball, and then you can learn about the fabric of space-time, right? And then all of a sudden, like, your intuition can start to build up, and it's like, oh, there's actually a deeper understanding. Now the difference is you can have a commodity money world. It's not impossible. It can certainly be imposed, and you could, I guess, do away with credit money if you had a strong enough kind of government system to absolutely enforce a sort of commodity money. But these credit money systems are kind of the natural. I don't want to say evolution, but they naturally emerge from systems that have humans acting in them, and so a lot of the discussion gets there, and then it's also kind of that discussion then that as we lead into the Bitcoin discussion even tonight and the various paths we might end up going on tonight, where this whole discussion breaks down because we talk about credit money, and Bitcoin is not credit money. It's definitionally very much the opposite, and so I guess it'll be a bit of a prime the well here for the night's discussion. But we will be discussing a little Bitcoin, big run up, where I think Bitcoin will likely go from here, and what's to come of that. So. Other than that, Adam, I don't know what else is on your mind that maybe we could hit on tonight.
Yeah, no, I think to kind of elaborate on what we talked about with Brett and the whole credit money versus, I don't know if you'd call it asset-based money or commodity money. What I thought was interesting that Brett brought up was that kind of by default, like if you don't have the credit money understanding that MMT obviously illuminates, and most people by default kind of think of money as a commodity, and that's why cryptocurrencies are so appealing, especially Bitcoin, because they look at US dollars and they only see the asset side. They don't see the liability side. And with Bitcoin, it kind of it almost fits into that worldview naturally, and it kind of makes sense if you're approaching if your understanding of money is that like commodity money, that feels like the default kind of understanding of money. So it makes sense that it's almost intuitive to people. But when you do understand credit-based systems and IOUs, then the whole thing kind of falls apart. So that framing that Brett, talked about on the podcast, I thought was super helpful.
I concur.
And I'm going to try to, I mentioned this in the last stream, but I do think the whole Tether thing is very interesting. Would love to talk about that. I don't know a ton about it, but I can kind of describe what I know, and maybe some people in chat can help me out. But I think that's an important thing to cover too when we talk about Bitcoin.
We'll get into it in just a second. Regarding the podcast, if you would like to listen to that or any other podcast that I've been a part of since I went or joined up with the AppliedMMT team, or that they put out before I was ever there, you can head on over to AppliedMMT.com and then podcast right at the top. And you can check that out. And there is every podcast that has been put out. So 22 episodes. Tomorrow will be episode 23. And again, it'll be a two-part. It'll be a two-part series that comes out then. So is it going to go next tomorrow and then a week later, 1 week apart?
2 weeks later.
2 weeks later. Okay.
Maybe I'll change it to 1 week. We'll see.
Okay.
Yeah.
Anyway, it was a good discussion. It was a great discussion. He's a smart guy, and certainly the questions come from kind of our finance-oriented perspective. So check or look out for that tomorrow. Keep an eye out for that tomorrow. Let's see. Let's get caught up on chat. I don't know if I want to get caught up on chat. I'm keeping an eye on the side here, and I think I'm going to regret catching up on chat here. But
Doug, do you mind sharing your screen?
Oh, with you, so you can see it. Yep.
Thank you.
Yeah. Let's see. Chat. I see Larry Summers this year. Always a pleasure. Larry, I DM'd you in Twitter. And you said you'd never heard of me before. So I'm starting to think this might be the fake Larry Summers, an imposter Larry Summers. But thanks for joining, Larry. Falsificationism also. Thanks for joining and saying hi. I'm saying all this. All right, you can see my... Can you see my shared screen?
I can.
We're good?
Yep, I'm good.
All right.
Yep.
Oh, you guys can see what I'm sharing. Overlaid now. Oh, well. All right. Do we have any questions in chat by any chance? I mean, I don't even know if I'm seeing anything question-wise. All right. No real questions at this point. All right. Let's talk Bitcoin then and kind of get things underway. And you had mentioned Tether too, and we can certainly bring that up. So let me go and bring Bitcoin up here. And I tweeted this out the other day, just that Bitcoin and the S&P 500 for the last 3, 4, 5 years now, I've had a pretty strong correlation. And I'll give you my overarching theory here as to why this correlation is the way that it is, and then there's also kind of some takeaways, and I've seen this happen with gold in the past as well. But there's only if all asset prices are going to rise at the same time, and there are scenarios where some assets might rise while others are flat, and you can get different market conditions. I'm not saying this is the only market condition that's possible, but generally speaking, if asset prices are rising, that's because new money is being created to purchase those assets. It's how asset prices rise, right? I mean, either one asset is being sold that's being converted to cash, and that cash is then being used to purchase another asset, or there's just new money creation. And you can only get new money creation endogenously or via government printing, right? So banks create money or the government prints money. Now, granted, there is the possibility you can get new financial assets by selling goods or services outside of your local economy and then take in those financial assets. So there's one way to get more money. But somehow new money has to be created to be purchasing asset prices. And certainly the work that we've done at AppliedMMT and the statistical work and all the mathematical models and the deep learning models that I've built have all pointed to the main driver being government spending, and then being I see that, Charles, about the 0.4 correlation since 2021 doesn't seem all that high. I'll explain in just a second why. Anyway, sometimes I should just turn off chat and not get myself distracted. But those flows have to be there, right? And there's no guarantee or there's no necessity for those flows to end up in one asset or another. Where they're going to end up is where there is either the best speculative bang for the buck, which is hard to determine. I'm not saying that's easy to determine, or where there is some sort of institutional incentive for that new money to end up, right? And then on top of that, so that would be for like the government spending channel of this. Now you also have the endogenous channels, the banks that are creating the loans, and that money also needs to end up places. But the banks do have a certain cycle for how it is that they're going to create those loans, right? So after a big collapse in bank credit, only the most conservative, most likely to succeed, and this is kind of Minsky 101, only the most conservative, likely to succeed projects are going to be taken on by banks, and you're going to see kind of slow or very risk averse, or they would say risk off sort of loan creation. And then slowly over a given cycle, you're going to see the competitive spirits and the animal spirits within the banks and kind of the capitalist competitive nature within the banks start to take on more and more risky loans. And as those risky loans get further and further away from kind of risk off into a more risk on environment, that then is all of a sudden when you start to see a lot of that new money creation find itself just supporting asset prices. And again, you see these cycles play out in assets that really serve, they're just speculative assets. There's no other way to put it. They are purely speculative assets. Now you can turn anything into a speculative asset that's not, right? You can speculate on oil, you can speculate on natural gas, but there are some assets too that are just pure speculative. And that's when you get yourself close to kind of the Ponzi finance world. And so the reason that I think there's a correlation here, and I'll explain too why I think you only see 0.4 correlation in just a second, as opposed to, I think we can all look at this on the screen and see that the ebbs and flows of Bitcoin and the stock market as a whole seem relatively correlated here. Anyway, I don't know where I was going to go with the point I was just going to make, but I think the reason that you see this correlation here is it's the same two channels that are propelling both Bitcoin and stocks at this point, and yeah, that's just how the flows go. And what I've noticed too is when you get sudden accelerations in things like gold, and now Bitcoin's kind of taken over that space, that is usually an indicator, and especially when it happens in conjunction with the dollar pushing lower, that's usually an indicator that you're getting another kind of phase shift in that Minsky, like you're stepping up the Minsky ladder, if you will. You're getting closer to the more speculative style asset creation, speculative style lending that banks find themselves in. So I think we're on that, pushing up that or pushing into that direction, and by no means does this mean that we are at the top of the kind of speculative curve. It just means that we're working our way through that, and I would expect, and since at this point Bitcoin's kind of earned the right to call itself the new gold, I would expect as we go through this next expansion cycle to see Bitcoin push higher through this cycle. Adam, I don't know if you had anything to kind of add to that. I know it was a bit meandering. I was also keeping one eye on chat as well while that went through. But if you have any thoughts, I'll read through chat here.
No, I think that was very well said. I think what I would add is the whole Tether thing is a big piece of the puzzle, from what I understand. I don't follow it super closely, but from what I've read, my understanding is that there's this legal entity, Tether. I don't know what the company is called. It might just be called Tether or something or other.
Isn't Tether Bitfinex?
I think Tether was originally Bitfinex, and I think Tether was the stable coin that Bitfinex issued.
Okay.
If you look, if anyone wants to read about this, there's a Twitter account called Bitfinex. Let me see what the handle is. It's just Bitfinex. Bitfinex, Bitfinexed. And this person just does like tireless work on covering what's going on with Tether, all of like the shady legal questions around it, the fraud. Basically, it's an entity based. I think it's based in the Bahamas,
British Virgin Islands. Yeah, iFinex is currently the name of the owner, which also owns Bitfinex as well. Yep. Got it.
And they had ties to FTX. I think they funded FTX initially. And basically, they create this stable coin called Tether that's supposedly backed by safe assets, by dollars, by treasuries. And, they claim to only issue Tether when they accumulate new safe assets. So they might issue 100 billion in Tether and then claim that they received 100 billion in deposits. And I think, I personally highly doubt that this company is receiving billions and billions and billions of US dollars or treasuries and then issuing the corresponding Tether. So I think it's very possible there'd be a bank run on Tether, which would probably be a disaster for the crypto markets. But I think, my understanding, tons of insiders in the crypto markets. Tether is a huge insider. I think a lot of the exchanges are insiders as well. And that kind of puts a floor. I think they intentionally put a floor on the Bitcoin price, and then they, are happy to pump the market as well. If anyone wants to correct me in chat and tell me I'm totally wrong, let me know. But that is my understanding of what's going on. So, and that's also my understanding of why the ETFs why the SEC was not allowing the ETFs, because of this underlying, Tether is one underlying insider that's pumping the market. But that was, and this company is being investigated. They've never been audited. So it's very shady. And I would just, if you are a Bitcoin person, I would be careful.
It is interesting too. I mean, when you just see the general patterns that emerge from Bitcoin over time, I mean, they look like highly speculative sort of patterns,
right?
That are consistent with the sort of patterns that you see with with just assets that generally attract speculation, and so. It does, it would make a lot of sense that they are just issuing Tether that aren't necessarily backed by any real asset.
Yep.
And one day we may find out if that's the case.
Well, I'll be curious. One of the other factors is even if there isn't like a huge bank run on Tether, it could just be that, some government decides to crack down on the company like they did with Binance and like they did with all these other exchanges. And then that will cause a huge blow up in itself. So it'll be interesting to see how it plays out for sure.
Yeah. What I would be interested in is someone who really understands Minsky. If they could do a full analysis of what's taking place in Bitcoin. Yep. And by Minsky, I mean someone who really understands Minsky, understands like what Steve Keen has done with his debt deflation models, and could really take a look at the world of Bitcoin, how it, because my gut assumption is telling me that they're using some sort of essentially endogenous money creation via Tether to prop up the price of Bitcoin.
Totally.
yeah. So
that's my read as well.
The other irony too here is I think they might have been saved from total calamity because of the rate hikes. I mean, I think the rate hikes actually helped out Bitcoin when it was all said and done. So
yeah, isn't it funny how, when I think, when was the last big crypto run up was while the stimulus checks were going out, right? 2020.
Yeah.
21, that period.
Yeah.
Now, and everyone is saying, oh, it's because zero interest rates. And now we're at 5+, and there's this massive run up, all-time highs.
Yeah. And I think it goes high. Although, okay, couple things. I've purchased Bitcoin. I've purchased ETH. I've purchased Litecoin. I've purchased like kind of on the off chains, like the BNB chain, to buy some shit coins. And the only, I shouldn't admit this online in a live stream, but I haven't found anything but pure speculation is any reason to have any of this stuff. I don't. This is some of the stuff we go in with Brett Scott. I don't get it. I still don't. I don't get it. Heck, even gold makes some sense to me because I at least have something physical I can own at the end of the day. And if we ended up in a post-apocalyptic world, in theory, I could trade gold for something, right? But I don't see how Bitcoin accomplishes that. And I say all that, I guess, just because, I think it was Joe Weisenthal who made this point that it seems like this run up right now, like everyone's in agreement that this is just a pure speculative bubble, or not necessarily a speculative bubble, but we're all in agreement that this is just pure speculation, right? Like
well, you know what I think? You know what I think it is? I think it's because, like, at this point, how many years into this are we? Like 14 years, 15 years. It's like there's still no use case for it, right? Initially, when only a very small percentage of people were familiar with Bitcoin, it was like, oh, maybe this is the future. But 15 years in, there's still no real use case outside of gambling. I think Adam
might know my use case then. Which is, actually, this is just a really good point. We'll get to the finance stuff too in just a second, but kind of the more finance oriented takes on this. But I live in Michigan, right? And up until 3 years ago, it was illegal to play poker online in Michigan. Or I'm sorry, there could be no state sanctioned poker websites in Michigan. And I like to play poker, and I'm an avid poker player. And so the only use case for Bitcoin was literally to get money onto Bitcoin poker sites, which is just to usurp the law, right?
I mean, I would say like that, I think that is the exception, is that like certain transactions that you can't do with a credit card, you might be able to do with Bitcoin.
Yes.
But that doesn't mean it's worth $70,000 of Bitcoin or whatever,
Yes. And in Michigan, it is now legal to play poker online, and so the point, the drive home point there is, or the point to drive home there is, just change the law, right? I mean, if it's a bad law, and we all agree that consenting adults can put a couple $100 in their poker account and play poker against each other, then just change the law, which is exactly what Michigan did. And to me, I think that's just the if something is outside of the legal payment structure, and we're all in agreement that it shouldn't be, then just change the law.
Right.
So,
right. Totally.
Let's see. There were a couple things I wanted to talk about the point for correlation, and I know the correlation is low, but I think a lot of that has to do with, and I'll have to run my own kind of statistical tests on this, and maybe there might be a better way to measure correlation, because I understand the swings of Bitcoin are much larger than the swings of the S&P 500, right? And so that'll certainly distort the correlation, but like the peaks and valleys of Bitcoin and stocks they're identical. I mean, we peaked in 2018 and we found a low in God, Larry Summers. I catch your comments every time and they distract me. So the peak is at the exact same time in Bitcoin and in stocks, and then the low is at the exact same time in Bitcoin and in stocks in 2018, and then you have what was almost the next run up in Bitcoin right before COVID, and then you had identical lows in the COVID sell off, and then effectively identical peaks in stocks and Bitcoins within a month of each other, and then almost identical lows, right? So the ebbs and flows. If you were a swing trader and you're timing this, and all you had was the S&P 500, you'd have a pretty good idea of where you were at, with Bitcoin if all you had was the S&P 500 chart. So even though the correlation isn't one-to-one, certainly the ability to understand where you're at within any given kind of cycle is certainly there. Yeah. Anyway, That's my thought on Bitcoin. I don't know if anyone has any questions in the chat, if this is even intriguing to anyone. I will say, my final take on the Bitcoin thing here is, and this I will admit is outside of what I'm capable of doing with my magic deep learning and statistics tools, but I don't know what the next best speculative asset will be. I just know that there will always be one, because that's human nature. There will always be one because that's just the nature of where markets turn to. It's to a certain extent a feature of capitalism, to a certain extent, and there will always be one, and I would suspect Bitcoin is here to stay in that sense, and I would anticipate a higher price in Bitcoin going forward. But what I will say is, given what Adam laid out with Tether, given what we kind of know about the underlying structure of what has supported a lot of the Bitcoin price historically, is there could be an event where there's a bit of a bank run on the main endogenous supporter of the price of Bitcoin, and that's not going to bode well if you have a ton of exposure. So that would be my one.
Well said, there. Doug. I think it'd be interesting to see, and I wonder how we could do this. I wonder if you could look at inflows to like sports gambling apps, websites, and compare them to Bitcoin, because I would bet there's a correlation there as well.
Yes, you're probably right.
Yeah,
you're probably right. One of the things I've always wanted to do, viewers, listeners of the show have known, I'm a big Counter-Strike fan, Counter-Strike player, and that ecosystem, it's a video game, and that ecosystem has in-game purchases where you can purchase skins for like it's a shooter, so you can get it for like the guns and stuff, and some of these things go for massive amounts. I got lucky to get one that was worth $1,800 and was able to sell it, but some of these things go for tens of thousands, even hundreds of thousands of dollars. But there's an economy. I mean, these things get traded all the time, and if you go ever look at the prices of these things they've been doing this now for over 10 years, where there's a marketplace of the ability to share these in-game assets. The stock chart, the history of the price of any asset that's super popular, in real money, not in-game money, real dollars, is the VR headset sitting behind me, the Valve Index, was purchased because I was able to sell my stupid in-game gun skin for real money, that I was able to purchase the $1,000 Valve headset. But if you look at
that. I'm sorry to interrupt you, but that was supposed to be the big use case for NFTs.
Yeah. I mean, Counter-Strike.
I was always just like, this stuff's, you could do this without blockchains, right? Like, games have been doing this for years.
Yes.
Yeah.
And that's why NFTs were originally intriguing to me, because I understood that this has been done. And anyway, the price, I'll get to that point in a second, but the price chart looks identical to any speculative asset. You get these big run-ups, sun collapses, big run-ups, sun collapses, big run-ups, sun collapses. And you've had like 3 or 4 cycles in the 10 years that the Counter-Strike skins have been for sale. And God, these comments, man. Larry Summers on fire tonight. Yeah, Counter-Strike greater than Bored Apes. So there's this thing. So anyway, going back to like NFTs, I'm like, yeah, I could see like a digital asset being worth something, and I even think like Zuckerberg understood this when he tried to create the metaverse. The problem is people really care about Counter-Strike. It has a massive fan base. You get like Neymar is out there streaming Counter-Strike every weekend in between soccer games, right? I mean, like people, it gets watched on the tournaments get watched by millions of people. It's a platform first and foremost. It's a popular platform. Right. It wasn't the other way around, right? The things are popular because. I mean, it's like trading cards, right? I mean, they're of value because of what the underlying platform is. I appreciated the NFT thing more than crypto because crypto pretends it's money, right? At least the NFTs were pretending to be, or not pretending to be. I guess they were pretending to be that they were collectibles, right? And that's what all this stuff ends up being. They're speculative collectibles. And I think NFTs are like a more honest version of what crypto is, right? Yes. I'm trying to see. You know what I don't know is what was the first. Like, what's a very early skin I could pull up and see the price history. Well, I'll figure that out some other time. I was just thinking maybe I could quickly. Doug is setting up to launch AppliedMMT NFTs. No, we are not gonna mint any NFTs. God, oh, you know what? Ghost on the Half Shell. That's a really good point. All right, with regards to the cost of the transaction for Bitcoin, this is one of the, we kind of dove into this too with the Brett Scott interview. This probably will be my last point on the Bitcoin thing. And unless Adam, if you have another thing you want to bring up, but I think what's I just don't understand here, right? Is like I was actually there were some meme coins that I wanted to purchase. I say that very sheepishly, but there were some meme coins that I wanted to purchase. So I was having to do some transferring of Foxtrot 007 AK-47 red laminate is one of the first ones. I will check that out. Very good, very good.
I'll look that up right now.
Yeah, if you can drop the link, go to look Steam Market AK red laminate, and then drop me a link, and I'll just pull it up. So I was doing some transfers, and it got me thinking. One, I mean, everyone wants their cut, right? The worst mistake I ever made was actually buying Bitcoin itself, because they wanted like $25 every time to like get it onto like a poker site or something like that, and then. The other thing that I kind of thought about is like I'm paying money into this network every time, and I eventually figured out like Litecoin was probably the best, but I'm still paying money into this network because this network has to fully reproduce itself to stay decentralized, right? It has to create a copy and settle this transaction on the network. Mm-hmm. Every single time someone's making a transaction, and that costs real resources. I mean, there's a real cost to that, and that real cost gets forwarded on to the end user in terms of, I think they call them like gas fees or something like that, right? And I'm like, why would anyone want something that's decentralized? The only people that care about a transaction are the person that's buying, the person that's selling, and the middleman that's going to facilitate that, which would be the bank. And they're willing to do that for free as long as the deposits stay in that bank. Or yeah, I mean, they do it for free. Even if the deposits don't stay in that bank, they still do it for free as kind of a loss leader. There is none of that in the Bitcoin world, as far as I'm aware. So it's always going to, I mean, the whole network needs to be aware of this transaction. I don't get the need for that. It never made sense to me. I wasn't convinced after not that Brett was making that argument, but I wasn't convinced that was the case. So, all right, I got were you able to find the actual?
I did. I sent it to you.
Well, were you able to find? I'm going to look this up. If you search the Steam market, you're able to see the.
I gotcha. Let me see.
The actual.
Oh yeah, got it. It actually peaked recently.
Nice.
It peaked in looks like February 13th. Oh no.
If you can send me the link, I will. If prices rise, do you suppose there will be more or less government spending? Prices rising of what? Of skins or of?
I think he's talking about just CPI.
Oh, are we on CPI now? Okay. Or he's just prices rise. Do you suppose there will be more or less government spending? Oh, okay. Charles, are you asking if in general prices start rising, so we get inflation again? Would prices rise? Would that cause? Yeah, I actually do think if we do get, CPI is coming out tomorrow. If we do get a surprise to the upside, I actually do think that will cause the government to spend even more in a cruel twist. They've got it backwards, so I think that's exactly how that would play out. Were you able to send me the link? Yeah. All right. Let's see if that does it. Lifetime. Oh, there was a massive peak that really distorts this entire chart. That kind of sucks. Let's see. But that's still kind of cool. All right. There's a bit of a peak here that's going to kind of distort this chart, but I will go ahead and transition. So here's in the game. You can, let's see, is my mouse showing you? In the game, it'll put like a skin on top of your gun as you're shooting, right? And the point I was making is, I'm going to kind of just zoom on in here a little bit on this chart. The point I was making, and this goes all the way back to 2014, it looks like. No, let's see. This would be 2024, 23, 22, 21, 20, 19, 18, 17, 16, 15, 14. Okay, so 2014, this thing goes back to, and so we'll just kind of zoom this, we'll zoom this in a little bit more here. You can kind of see, like, it goes in these boom and bust cycles. I don't know any other way to put it, right? There's this constant kind of boom and bust cycle that plays out over time. And I somewhere this data is aggregate, right? And it just feels like to me, you know how those like hedge funds find really obscure data to get like an edge on, right? In trades, it feels like Counter-Strike skins could absolutely give you that edge. So I don't know. That is the Counter-Strike skin world, and it's kind of crazy to see these like little boom and bust cycles all play it. I'll zoom in a little bit more. And it's identical to the way, I guess the point I was trying to make is, if I zoom on in here, it's identical to the way that Bitcoin looks, right? I mean, you could see this and say, oh, I mean, short of, the big shoots that are like accidental buys. Yeah, this is a speculative asset. This is what a chart looks like of a highly speculative asset. And it doesn't look too far different than a Bitcoin chart, right? You get 100% run up, you get a 60% decline, 100% run up, 60% decline over and over again. All right, enough about Counter-Strike for now. Where were we going? I forget. I don't know.
We were going CPI. If CPI comes in hot, will the government continue to spend?
Yes. Yeah, they'll continue to spend because they think that'll actually cool inflation. That is the perverse world that we're in right now, is that if CPI starts coming in hot, and if CPI comes in hot, then the Fed's going to be more inclined to want to hike rates. If they hike rates, that's going to perpetuate what we've seen over the last year and a half, 2 years since the original rate hikes. Actually, we're almost on the eve. I think it was like April, right? Wasn't it April that we got the first rate hike in 2022? I think it
I
might have been.
think so. Yeah.
I think it might have been. So we are very close to the first rate hike. So for the last 2 years we've had this, and it's only going to exacerbate everything we've seen, right? So I mean, if they hike rates again, it's only going to be more interest income to the private sector. The other thing too, and someone was pointing this out in a Twitter thread, and it's probably worth diving into. I should probably tell this guy what's up, but he's like, the biggest holder of treasuries is like the Fed themselves, and then other countries are big holders of treasury, and a lot of people outside just me or you owning treasuries. And that's the case. And granted, any interest income that's going to the Fed is being handed back to the Treasury, so that is getting erased and not affecting anything. And that does account for a massive, it's a $4 trillion or something like that chunk of Treasuries. But a lot of that is going to pension funds. I mean, pension funds, I think, as a single holder, I think is still the largest. I think they're larger even than the foreign sector. I could be wrong, but they're very comparable if they are. The other point would be the foreign sector, they're getting dollars in return, right? So yeah, they can absolutely reinvest those dollars back into more treasuries and just continue to get the additional interest income. But they can also buy American crap, right? I mean, and it looks like that's not crap, but like American-made goods and services, and it looks like that's what they're doing, because if they are, the symptom of that, right, if they're actually spending that as opposed to just continuing to save that, the symptom of that is a growing economy, right? Like you're getting the purchase of new goods and services, which means companies are getting the signal to expand their business, to hire more people, and for the most part, that's what we're seeing. A very healthy jobs market. We're continuing to see expansion in terms of manufacturing and all that sort of stuff. And so it's clear that there's a demand to buy things. Well, where's that demand coming from? It can only come from new dollars, whether that's being government spent new dollars or that's being endogenously created new dollars. That new spending can only come from somewhere, and it's clearly coming from this money. And then the biggest subsection of this that this guy absolutely missed, if you don't think that it's the higher interest rates that are juicing this market, back in 2008, Ben Bernanke went to Congress and said, hey, we need to start being able to actually pay the banks interest on reserves. Otherwise, we're not going to be able to get to do what we need with this new fandangled QE that they had at the time, where they needed a ceiling and a floor for the Fed funds rate at the exact same time. And the Congress was like, okay, well, interest rates are at zero. You can pay them interest on the reserves. Well, lo and behold, 10 years later, we're at 5.5% on interest on reserves, and so they're making trillions off this. It'll be like $1 trillion soon here, and just interest on reserves for the banking sector, which allows the banking sector to create even more risky loans. It's free money for the banks. I mean, we are finally in what everyone thought we were in for the last decade. We are really in the cheap, easy, free money era, and it's just getting started in terms of how the cycle could end up. In the sense that the Fed doesn't know they have it backwards. We continue to do this. Trillions are entering the private sector. That is, I mean, we have more real money, base money, MMT base money in the private sector than we've had ever, and we haven't even. I mean, the party hasn't even gotten started yet. It's kind of just getting started in terms of the overall impact of that. So, yeah. I think, I do think we'll start to continue to see surprises to the upside on CPI. Maybe we can discuss this next week when we finally get the CPI number and just some thoughts. But I think surprises to the upside should be expected. Does that mean inflation is going to take off? We'll find out. I don't think it has to. I think we could easily see productivity gains offset the demand increase from that additional interest income that's hitting the private sector. But eventually, given the right circumstances, if we can't meet the production gains necessary, that will just be too much demand, not enough supply. It'll technically be a supply shortage at that time, and we could see inflation really kick up from there. So I don't know if I left anything out there, Adam, but
Yeah, one thing I actually wanted to touch on, and Doug, I'm going to send you a message with this chart.
Okay.
If you could share it. But one thing I thought was interesting is that interest costs are no longer included in CPI, and they actually used to be. I think prior to 1983. So someone, I think it was Derek Thompson, who writes for the Atlantic.
That's wild.
He wrote he wrote an art, or he was discussing on a podcast with Kyla Scanlon, and basically said, like one of the reasons people feel like inflation is way worse than it is, even though CPI has come down a lot, is because the interest costs are, they're bearing the brunt of the interest costs, but that's not in the CPI numbers. And that kind of goes back to what we've been saying for a long time, that the Fed is, like, by definition, increasing prices by raising rates. And people are feeling that, but it's not being reported in the CPI figures. Like the Fed is creating what it's trying to, the problem it's trying to fix, which is what we've been saying for months now. So I thought this was super interesting, and it doesn't get much. I didn't know anything about this until
That's
I saw
wild.
this.
Okay.
Yeah. Yep.
I'm gonna have to look into this. How would estimated CPI using pre-1983 housing method to include personal interest payments? So CPI is measuring a basket of goods.
Yep.
1 month to the next, and showing the change of that basket of goods.
Yep.
How would you exclude? Oh, this isn't income. This isn't an income. This is the cost of interest on.
Yeah.
I
Yes.
get it.
Yeah,
Okay.
yeah.
Okay.
Yeah.
I get it. That makes sense. Okay. Okay. So what you're saying is, now, if I go get a loan, would something like a car lease, then would that be like a really good way of seeing like hidden interest payments?
Yeah. So like mortgage, car loan, you name it.
Okay.
Financing costs went way up, but the way we measure CPI right now is not including those interest payments.
So if I go get a car, this is really interesting. If I go get a car under 0% interest regime, there's no interest, so there's no okay. But I go get a car today, like I lease a car, right? Because I leased a car when rates were still at zero. So and I'm about to release, right? So when I leased it, then I'm paying whatever $300 a month for that lease. When I go back and do a new lease this time, and it's $500 a month for the exact same car.
Yep.
Inflation is still seeing that car as $300 a month.
Right.
But in fact, I'm paying $200 more.
Yeah.
Oh, that's
exactly.
Okay.
Yep.
Okay. In things like car leases, I think it would be pretty. Yeah. Car leases to me seem like a really stealth, because they're expensive, right?
Totally.
Totally. And you don't even think like, that extra $200 is not actually being counted in inflation. When you look at your mortgage that you're getting really screwed over, right? Because you do calculate the interest when you go to get a mortgage, but I've never thought something like a lease. You would never think, well, what is the actual interest cost in this lease?
Right.
Oh wow, that's
and think about the knock-on effects for like a business or something. Like if a business is borrowing,
yes,
like they're gonna pass that cost on, and
wow.
Yeah, I mean it goes back to what we've been saying. It's like by definition they're raising prices, and then hoping that lowers prices. Like it's crazy. I don't know.
That's fascinating. I'm still here. I just gotta step out of view for just a second.
No worries.
That is okay. Yeah, I bet there's a lot of places where you can get stealth stuff. You know what I just did? My son, I finally got my next son a cell phone, and that's another thing that I think I pay interest on the phone too, right? Because they give you the phone free up front, and then you pay that off over.
You might.
Three years.
A lot of those are zero interest. So I'm not sure. It depends who you bought it through.
Okay. This is still fascinating stuff though. All right. That's a really cool point, man. I learned something good on the mind bending on the stream tonight. Thanks for bringing that up. Let's see. I wanted to finish on this point, and again, guys and gals, tomorrow the podcast comes out with Brett Scott, where we'll be talking all things Bitcoin. It'll be a two-parter. We like planned on an hour, and it just kept going. But again, AppliedMMT.com. Head on over to the podcast tab, and that will get you to that podcast if you're interested in that. Did you have anything else on Bitcoin? And
I don't. I don't know if the chat does.
Did I miss any questions too, Chad? If there was anything you really wanted answered as well, make sure you get it in here. I was not paying too much attention to chat. Larry Summers, I appreciate it, man. Welcome to the Church of Doug, and where I preach all things MMT, and we'll save your soul with MMT. Oh, this is a good question. Have I ever tried to take any crypto out? I have never brought crypto back to, like, my main connection between the real world of money and the crypto world is what do I use? What's the coin? What's the main coin one? What's that called? Coinbase, yeah, it's Coinbase. So I've never taken money from Coinbase and it's connected to my PayPal back into my PayPal. So that step I've never done yet. So I should probably test that out. But anyway, yeah, I've never, but I have gone from meme coin and shitcoin back to like what's called like BNB back to one of the main coins, ETH.
I think BNB was Binance's stable coin, wasn't it?
Yeah, Beacon something or another. I don't know what one of the.
Let's see.
I don't know what it stood for.
I think that was Binance's stable coin.
The B and the C were Binance Network.
Yeah. BNB chain.
They were the chain like before, like, well, a handful of the different things came about where you could get meme coins at, but a lot of the obscure meme coins were all based on that out of the gate. So I've still got my fingers crossed that I've put my my money in the right meme coin. So dumb. God, this is the other thing too, though. Charles brings up selling, trading Bitcoin for anything else has been a terrible mistake in my life. I'll tell you one of the things that, and I asked this to anyone who's like, oh, if only I had bought. And so I had heard of Bitcoin years ago. I mean, I like, this was the space that I would have absolutely been interested in and knew about. I never specifically got too interested in Bitcoin. But when the Bitcoin white paper was being written and it was first getting off the ground, I mean, I was very much right. I mean, it was right in the transition period between where I kind of understood what money was and would have been intrigued with Bitcoin. And so I had a friend who bought Bitcoin at around $1. And I think he had like about $100 worth of Bitcoin at $1. And this is the difficult part, and it's it's obvious to see now how you should have played it, but he bought it at $1, and there's a ton of people like that, and he sold it at 10, right? I mean, he got a 10x. Right? It makes complete sense. How do you know that thing's going to go to 100? How do you know that thing's going to go to 1,000? How do you know that thing's going to go to 70,000? And how do you know to hold that entire time? It's impossible, right? I mean, it's not impossible, but I'll tell you what you can do if you think you have the secret sauce to beat it. But any speculative asset like that is very difficult to hold on to. And how do you know when to sell? I mean, especially when you understand that the underlying foundation of something like that is not tenable long term, and it's highly prone to potentially blow up. How do you know when to pull out? And you don't. I mean, that's the thing. You don't. Yep. So he bought it at $1, sold at 10. A little while back, bought back again at like 40 or 50, and then sold at 100, and then he was finally out. And it's impossible to time that sort of stuff and know, to what extent things could go. Which is why, people will say something like, Bitcoin's better. Well, it is if you have no ability to obtain leverage, but for me, someone who trades stocks and the S&P as a whole and sees the each dot connected from fiscal and endogenous flow to the stock market, I'm not recommending anyone use leverage, but I feel far more comfortable using leverage because I know the things that can influence the price of markets at any given time and where the big risks are and where the big potential pitfalls are. When that stuff is the crash of Bitcoin is an Elizabeth Warren bill away from happening, right? Right. And that's not to say that the U.S. couldn't undermine the 401k system tomorrow, right? And I would say the 401k system is integral to the entirety of the analysis that I do here, right? It is the every time I say there's institutional incentives for money to flow into stocks, well, it's the 401k and the IRA system, right? And if that went away, a lot of what I've done would have to be recalibrated. But that would be telegraphed like 10 years in advance if something like that were to happen, right? The Bitcoin thing could happen tomorrow, and they could investigate Tether if in fact Tether is the underlying support, and that could blow up tomorrow. I think that's it. I don't know, Adam, are you able to see the chat? Did anything else come in that looked like it needed to?
I'm getting a kick out of Larry Summers' comments as always.
Good.
But yeah, I haven't seen anything else. I think Charles Mosler has talked about Bitcoin. He basically the way he described it, I think, is, you solve a puzzle to earn a number, and a lot of resources go into solving that puzzle. And his issue with it is there's no final demand for it. So there's, like with dollars, there's final demand from the government for dollars to cancel tax payments. With Bitcoin, there's no final demand. And that's at least Mosler's take. I don't want to speak for MMT, but that's how Mosler thinks about it.
Makes sense. Amen. Back to the Church of Doug. Let's see. Last thing that I want to finish off on tonight, and I was going to do this. I was going to do this last week, and I never got to this point. And I've got a follow-up tweet to come. And this is Adam. Do you have anything else Bitcoin related, or can I?
I don't.
Can I shift
here? I'm
here?
tapped out. I'm tapped out on Bitcoin.
All right. The final thing that I wanted to talk about, and this goes back to the tweet that I made maybe now a week or two ago, looking at the bubble, right? And this will actually tie into how, at least I feel comfortable kind of knowing where the tops of markets are likely to happen at. And I had mentioned in that tweet that, and last week, that bubbles happen when you get a sudden acceleration in credit. And this is important too. And I don't, it's hard to know that you're driving this stuff home in Twitter or not. But what creates the instability in markets is the symptom, the outcome of instability is the crash, right? Like we feel the instability on the contraction side, but what actually creates the instability is the sudden acceleration of credit in the business cycle. And how I know this is true is we had just very lackluster growth and very stable, non-accelerating credit markets during 0% interest rates, right? So we had a decade where we never got the acceleration, right? And it was only when you get the massive, this is also why I know that higher interest rates are stimulative and the government spending is stimulative, because it wasn't until after the massive government spending that took place in 2020 that we got the first real kind of credit acceleration cycle that caused some sort of instability to actually manifest in 2020 and 2021, where it ultimately manifested in 2022 is the contraction that we saw in 2022. But you need the sudden acceleration in the credit cycle to coincide with the contraction of government spending. Now, we talked about this last week, so I'm not going to go too much into it, but I wanted to show, though, and I think this is really cool when you plot this in three-dimensional space, and I tweeted this out as well, but I thought I'd go over it a little bit, as it really just kind of shows the overall cycle. So what this is that on the x-axis here, so right now we're looking at the top label, is private debt to GDP. So part of the hypothesis is private debt to GDP, as private debt to GDP increases, that increases it's the confounding variable to this whole system, right? The higher that thing gets, the more likely chaos is to ensue when you finally get a contraction that occurs. And that's why the deepest sell-off that we had was at the highest of that scale, right? This isn't one for one. There's obviously a lot of other variables that go into this, but that is the x-axis. As it stands right now, then the y-axis. So here on the left label, this is going to be the change in government spending. So I've got this right now essentially lined up with what you would see if you were looking at government spending, and I added a plane at 0 to kind of add some. You can see the depth here, but it's when you get below 0, right? So you're actually seeing, this is surplus in real terms, right? That's where these dots are being plotted at. Okay, so when they get to the 0 point, we're effectively in surplus land. Now, what you don't see, and I'll get to this angle in just a second, but the z-axis coming at you is the actual credit cycle, the sudden acceleration into the credit cycle that you're going to see. So that's the change in credit over time. And what I did is I labeled each dot the color of the 9-month forward return that played out. So the return of the S&P 500 is what plays out 9 months after this event. And I did that because I think it shows really well now when I change this, that this isn't just a correlation to S&P price. This is actually the cause of the S&P price, right? So this is truly a forecastable tool, right? Its purpose was built to explain what causes the prices in the S&P to change, and that you can use this data to forecast. And so as I kind of twist this over here, and hopefully you can still kind of see through this plane that it's when we hit the peak, it's when we hit the acceleration in credit. So September of 2000, the acceleration hit July of 2022, and it might have even hit before that, April 2022, and then heading into early 2008, right? That's when, and again, that's then 9 months forward is what the return was of the dot, right? So if it was, if we were peaking whenever we did, that's 9 months forward for when the return was. It's that acceleration that you need to be concerned about, and it's that kind of peaking of the acceleration where the bubble ultimately pops. So I wanted to add that in there, and then I also wanted to kind of add this tool to help you visualize that. And there were a few questions on that post. Where they were saying, "Hey, isn't it? Didn't you say that it's the coming down of the credit?" It is, but the instability happens at the apex. It happens at that acceleration that plays out, and it's the acceleration to a certain level that you need to be concerned about, because after that, the inevitable fall is there, especially when you get the government spending contraction as well. So what you can do from here, we'll talk about this next week. I'm working on it right now, and I'll tweet this out as well, and we'll probably discuss this next week or the week after, is you can put this into a learning model and actually build a learning model out of this where you can then just predict this in real time, right? So, I mean, these where are we at? These kind of gray dots down here are the current readings for where we're at, right? And so you can take the learning model, have it learn based on each outcome here over history, and then build this classifier model. So you just put it into one of 4 quartile returns, highest, medium, neutral, bearish, shorter returns, and you actually can build a machine learning or deep learning model based on just these 3 factors alone, and it's incredibly predictive. It is like spooky how predictive it turns out to be based on just kind of 3 variables here, and we'll definitely look at that in the coming weeks, and part of kind of one of our flagship models that we built over at AppliedMMT. But that was the last thing I wanted to follow up on. I had this loaded up to go over last week, and then we just got some really good questions and went down that path. But I wanted to finish with this, and my guess, and maybe I can do this if I have some extra time. Probably would have to do it with gold, not Bitcoin, because Bitcoin's so new. But I would imagine this exact same thing works with Bitcoin and gold, right? I mean, I bet there's something to learn there from a model like this with highly speculative assets, because those highly speculative assets operate on the same flows as stocks do. I don't know if you have any thoughts on that, Adam.
I would be careful just because of the Tether thing, right? Like
with Bitcoin. Yeah.
Because I mean, I think gold probably makes sense, but with Tether, it's like this whole endogenous money creation that's happening, I think, that is supporting the price level.
Yes.
Right.
Yes.
Because they're operating in an unregulated market.
Yes.
Essentially. So yeah, that's where you'd have to be careful with that.
I do agree.
Yeah,
there would be, yeah. And I'm not, and again, I'm not recommending speculating on any asset at all. I really mean that disclaimer at the end. And if you want to look the other way to the disclaimer at the very end, I'm seeing some good questions come in. Sorry. If you want to ignore the disclaimer, I mean, realize what Adam is saying, that there is an affirmed and confirmed government institutional incentive for stocks that does not exist in Bitcoin world. In fact, right. It's not even implicit at this point. If anything, it's implied that it might go away at any moment, right? And so that's the risk. Do you have evidence for an endogenous tether theory? I think I came up with a video where I think I did this a couple years ago now. I'd have to find the link. I can see if I can do it on the fly. But if I recall, I do think I was able to suss something out to where it kind of made sense. I gotta find it. Was it? I have a few Bitcoin videos. If you look at my channel, there are a few videos that I've done in the past where I try to piece together what I think to be the connection between endogeneity, Tether, and Bitcoin, and just kind of the way Bitcoin really tracks the credit cycle as a whole, and there seems to be a connection there. So what I didn't do, and what I just don't have the like I'm not an expert enough in blockchain to know, is to show it out, playing in time on the chain at all. But it's more from like a monetary perspective that would be the case. Good question here by Vladimir. Does this model work for oil prices as well? The answer would probably be quite unlikely, and the reason would be the main drivers of oil prices are just not monetary drivers. However, one of the things, if I wasn't such a fiend for Counter-Strike, we'd probably already have completed Friday night. But Adam and I are right now actually working on some tools specifically with oil and inflation, as it were. But we were, as it were, working Friday night to build some analysis up on that. So soon we'll probably have something. Cool to share on some of the drivers for oil. I'm going to go one last question here. What does endogenous mean from Larry Summers? That's a good question, Larry. Clearly, you don't know what it means, and we'll leave it there. That's all I got. That's all I got. Adam, do you have anything to finish off on tonight?
I don't. I would say, well, I do. Yeah, if you want to read up on Tether, I recommend. And Doug, I sent you a link if you want to.
I can post it.
Share the Twitter account. There's a poster who covers Tether quite in depth and obsessively, and has been for a long time. Bitfinex, he goes by. I would check that out.
I'll switch over there real quick. Bitfinex. Yeah, I've been following him for some time as well. I even turned on notifications with him when like last year when it was looking like things were getting really spicy. It was it was getting spicy there, and I think Bitfinex hasn't made money. Yeah, maybe he is just sad that he didn't. Maybe he bought at 1 and sold at 5 and is still upset to this day. Yeah, Bitfinex is a good one. All right. It's been another great night, everybody. I see the video game references coming in. It's hard for me not to chime in, but we will wrap it up there. We will see everyone next week. Adam, unless you have anything on the way out.
I don't. Thank you guys for joining tonight. Appreciate it.
Yes. All right, everyone, have a great night, and we'll see everyone next time. Good trading, and we'll talk to you then. Bye-bye.